Three different gaps on three of our pairs over the weekend. What just happened? How can we play it? And what opportunities are there for these potential gaps to pull back? We'll talk about it. Roll the intro. Traders, what's up guys? Welcome back to the Top Trader channel. It's your head trader here, Cleveland Bishop. Hope you guys are having a fantastic start off to the week. US session has yet to open up. We're going to open up in about 30 minutes or so. It's 8:54 here Eastern Standard Time. So excited to bring you guys some information on what's happening in these markets right now. As you guys can see, I have a little friend tagging along. My buddy ended up using my mic, and I'm like, hey, let's use the podcasting mic. I think it'll add a cool little vibe and it's going to be a good replacement. So bear with me if you guys like the podcast mic and the volume and whatnot. Just let me know. We can keep doing this if you want to. All right. So last week was a pretty interesting one. We were mentioning a lot regarding Brexit. We were mentioning a lot of things. We mentioned a little bit certain things regarding trade talks as well. And so what ended up happening over the weekend, as you guys know, I will pull this up on the screen in just a sec. Here you guys go. This is one of our indexes. Trump threatened tariffs, right? A 25% potential continued hike on Chinese goods, right? What's interesting is how this came about. It was literally from one of his advisors, one of his economic advisors, merely just saying that he felt as if China was not going to go through with some of the deals that they were proposing. So then Trump had to, jump the gun and basically say, hey, look, well, then I'm going to heighten tariffs. And now China, of course, is potentially retaliating. So that is the initial reason why we saw all of these different price hikes. If we pull over to maybe some of our currency indexes, you guys will see said price hikes. This is the Japanese yen here. Why did the Japanese yen pop to the upside? We have been selling the Japanese yen all through March, and we were trying to sell it also a little bit in later March. But then we just, as you guys can see, ended up consolidating for quite some time. And now we have severely turned around from those previous lows. If I pull this open here real quick, let's go to the weekly. What you guys will notice is what? Look at this pretty large structural level here where markets basically consolidated there, in terms of consolidated at that low, and they had a pretty large bounce to the upside. So we're looking at probably around a 50% retracement from the low here to the high there, and then we had the markets turn around a bit. And again, this happened because the Japanese yen is considered a safe haven currency. By the way, guys, like and subscribe. I forgot to mention that. If you guys are new to the channel, make sure that you guys subscribe. Happy to have you. And if you guys like the content, if you like a cool little mic, make sure you guys like the video for your boy. I very much appreciate it. All right. So yes, the yen is a safe haven currency. Usually capital is repatriated back into the Japanese yen when there's lots of risk and uncertainty in the marketplace. Why is that the case? Well, the Japanese yen has a negative interest rate. So when you store your capital over in Japanese yen banks, you know what happens? Literally, semi-annually, quarterly, whatever it is with your institution, they're taking money out of your account, right? So you know how you're supposed to have a savings account, and in that savings account, because there's capital on hand, the bank is supposed to lend that money out, and them lending that money out gives you an interest rate. Well, that doesn't exist in China. They don't want you to store any of the capital in the banks. They want you to be using that capital abroad or investing that capital in different resources inside of the country. So they give you that negative interest rate. So then usually these Japanese investors and Japanese residents, they repatriate capital back into the country when there's lots of risk and uncertainty in markets. People that have capital in China, people that have capital in the US, they don't want to keep their money over there if there's this massive trade war just going on, right? This thing's giving me a vibe, man. I'm feeling like Joe Rogan. They don't want to see a trade war going on, right? They don't want to have their capital overseas and it being so risky. So they'll pull that money back into the markets, and that's exactly what we're seeing here in terms of a pop. So now that we can price in that data, right? Now that we know why the markets have moved, now we can start rationalizing if that market can sustain, right? So this is one of the strategies that we teach over inside of our Top Trader Academy, is trying to analyze all of these price moves and trying to rationalize, again, what potentially can happen and if those market catalysts can actually stay in the stay here present in the chart. So it's pretty interesting stuff. So if we move over, that's, again, we're just showing you guys the indexes as of right now. Then we'll go deeper into some currency pairs. Here, New Zealand dollar as well, lots of risk. Why is the New Zealand dollar selling the heck off? Well, of course, New Zealand's largest trading partner is who? China. Okay, so again, if anything crazy happens in China, when we were looking at the Shanghai index selling off, you know what we were seeing? We were seeing the New Zealand dollar selling off, and we were also seeing the Australian dollar selling off as well. You guys can see right here, we had an Australian dollar gap sell side yesterday. Okay, so Japanese yen, Australian dollar, and the New Zealand dollar all had pretty large moves over the past 48 hours or so that we are currently assessing, and they're considered like in our red zone, right? These are currency moves that anytime we see an enormous amount of volatility, risk, but that also means there's increased opportunity. All right, so we're going to be actively trading these markets and seeing exactly what we can get out of them, and I'm going to give you guys an idea as to what we think in just a second. Moving over, US dollar still holding those highs, so we're going to see what happens there. A lot of folks have been talking smack about the dollar, even though it's been at its highest levels almost in, you know, about 2 years or so. So that's pretty interesting stuff. Of course, as you guys know, Brexit data has been coming out and it's been slightly positive. That's why we saw the pound rocket ship over the past week. So last week, this is a weekly chart here. You guys can see Brexit, the pound exploding to the upside, and now we're slowly pulling back a bit, but that's okay. That's mean reversion. Markets couldn't hold the highs. But again, that still may lead us to an opportunity to maybe catch that move on a down move and then hopefully bring it back to the upside. We'll be talking about that throughout this week as well. And then you even have the Swiss franc. Of course, the Swiss franc down at the lows as well. Again, all of these different things, all of these different market moves are happening right now because of the type of risk that's entering into the marketplace. So let's take a look and head over to our actual currency pairs and see what's going on. You guys can see here on our Euro USD, we're still sitting under $1.11. That's pretty insane. And what's the reason why we're under $1.11? It should be because that euro is actually so the euro is still holding these lows, and of course that's not good. We need a euro pop to the upside if we expect the euro to trade back into the 12s, the 13s, and the 14s. So again, still taking a look at it. If you guys can notice here on the euro, there's seemingly a channel selling to the downside here. All right, there's seemingly a channel to the downside. So yes, you got a little poke out in that instance, but on a weekly, it actually turns out to just be a wick. And so here you go. So this is really one of the things that I'm assessing for the Euro USD on a daily perspective. I want to see exactly what happens here. If we can test the upper bounds of that channel, that may lead to a potential sell-off as long as it has some confluence with the fundamentals at hand. So right now I don't have a pressing dollar or a pressing euro catalyst that's going to get me excited, but it's awesome because as long as I can stay within that channel, anytime I get to one of the lower bounds or the upper bounds, I might be able to take some action on a lower time frame and execute some of the liquidity plays that may be happening during that time. Liquidity plays are ones that are happening during the intraday time frames. Okay, so I'm looking at the fundamentals on the higher time frame. When we want to just take a little bit of a grab and go and play some of the intraday volatility, then we'll play some of the liquidity style trading strategies that we execute. I hope that makes sense to you guys. So again, moving along, what do we see? You know, what are some of the pairs that you guys want me to look at? I'll do another one of these segments later on this week and kind of doing a recap of that. There is something that I am taking a look at a pretty high, in pretty high regard. All right, and it is this Euro CHF. Euro CHF to me is in an opportunity where it's like, okay, obviously you guys see the massive explosion right here where we see markets running to the upside. Let's put a fib on that real quick just so we can calculate exactly where we are. So from the high to the low, bada bing, bada boom, we're sitting right there at that 38.2 we have popped up, and now we're testing the 23.6. You know, now we're just waiting to see, right? So for me, what I would love to see for this euro, I want to see a euro pop. I really do. If we get to have a little bit of euro side strength, then yeah, we will see this market potentially start to break those highs. But I'm not opposed, depending on what ends up happening in the global markets from a political sense, that CHF could have a little price move in and of itself to a buy side. So you may see this market again, if that euro stays continuing to do what it's doing, right? We've had Germany, wages slowing massively. We had Germany CPI slowing as well. Again, there has to be some things that can pop that euro that I'm just not seeing right now. Brexit could be something, but Brexit didn't have the effect on the euro that it usually has. So again, if that CHF wants to have a little bit of strength and that euro stays stagnant, well then definitely we could see some type of move to the sell side there for that euro CHF. So again, we're just going to keep an eye over there. Lastly, real quick, I wanted to take a look at the euro JPY. There's going to be so many moves happening, folks, throughout this week. So I don't want you guys to freak out and try to rationalize that there's not something happening. So Euro JPY is one of those gap plays that I actually want to execute on. If you guys notice here, we are holding the low pretty massively. And if that JPY ends up turning around just a bit, just filling that gap just a bit, then 100% we should be able to see a push back inside of the range. I don't know if you guys remember, about 3 breakdowns ago, we were actually looking for the Euro JPY to break to the upside. That was obviously before this trade, this tariff calamity that just came into play with Trump and China. So again, if we start to restabilize a bit, 100%, folks, I'm really looking for this market to fill that void, fill that gap, and not only that, potentially start testing the upper bounds of that range again. So let's keep an eye out on that Euro JPY as well. And then one more thing, let's head over to the pound crosses and see what's happening on the pound and see what's going on there. So pound AUD was something that was interesting that me and the guys were looking at. If you guys take a look here at the pound AUD, this again is a daily time frame. What are you guys noticing? A massive move to the upside. We have markets hanging here in this upside area. For us, that somewhat can breed opportunity. It really can, because this gives us a scenario where we may deem markets as overextended. Now all we're trying to do is calculate a downside move and trade this market back down into its respective consolidation, which will put us around the 184.20s. Right now we're at the 186.10s. So there's obviously some market moves there that we can potentially capitalize on. So guys, there's definitely some opportunity here in the markets. Again, you guys know what I'm looking for when it comes to the week. These are some of the pairs that we have been taking a look at. Euro JPY trading back to the upside. That was something that we were looking to do in terms of a gap fill on the JPY. Now, the reason I'm looking for a gap fill on the JPY as opposed to a gap fill on the Aussie and the New Zealand dollar is because the way the New Zealand dollar and the way the Australian dollar has sold off really truly has to deal with the tariff and the trade war, right? So they're directly correlated back over to China. The Japanese yen selling, buying to the upside, yes, is correlated to the China situation, but it's indirectly correlated because it's nothing more than a safe haven play. So there are many scenarios that can drive capital back over to the Japanese economy. And so in my head, things can simmer down a bit and just not be talked about when it comes to trade and tariffs versus Trump versus China, but you still may have that Australian dollar and that New Zealand dollar at their lows, while that Japanese yen can somewhat start to rationalize and see that, okay, there still might be some opportunity overseas. Let's start to pull that capital back out into the space here. So we'll see what happens with the Japanese yen. If you guys got any questions, let me know. Again, we're starting some new content segments. Hopefully we can get one cranked out this week. They're going to be a lot different than what you guys are usually used to, which is just me screaming in front of this really cool little setup that we have in the back office. All right, so let me know if you guys still have any ideas when it comes to that. Let's see what we get this week. All right, if you guys need any help, just head over to the link in the bio. Get inside the academy. It's going to be right there for you. I'll talk to you guys real soon. All right, let's see what we get. Talk soon.